M-Shwari kicked off about 6 years ago, about November 2012. This audience will be very interested to know what is your story, what made you to make that decision, and basically how did you start?
Good morning. CBA and Safaricom has had a journey going back to the foundation of M-Pesa. And I think that the M-Shwari discussion would not be complete without talking about the M-Pesa journey.
Right.
And it's something I often say to a lot of people about when this all started, close to about 13, 14 years ago, when a group of banks were invited to a discussion by DFID at the time. We and with Safaricom, and to discuss what we could do about solving a problem of microloan payments. And we had a whole day scheduled for this conversation. And by noon, everybody had left the meeting. After lunch, everybody had left, and I was left in the meeting with Michael Joseph, the DFID team, and looking at ourselves as to what to do next. And that is really the start of this journey around mobile payments. And so I think the point I'm trying to highlight is that CBA has been part of the mobile payments journey right from inception, designing, testing it, and making sure it worked, and then supporting the back end of it from a payment management, back-end payment management perspective. 3 years later, we began having a conversation around what do you do with M-Pesa and the success it has insofar as the customers were concerned, because they were technically running a current account. And so we began thinking about what added solutions would we be able to provide to these millions of customers. And that was really when working with FSD Kenya, we basically began putting groups of people together to just appreciate what were some of their needs from a financial services perspective, what were the challenges they were having of dealing with banks, and how could we solve those problems. It is really arising out of that research that M-Shwari was born, and really developed as a complete banking solution which simplified things, used data and analytics to basically be able to allow people who ordinarily would not be able to access banking services to begin accessing banking services. First of all, from a savings point of view. And so as at the end of December this year, we have just in excess of 25 million users of M-Shwari from a savings point of view, of whom just around 5 million people would come in and borrow every month. Right. And so that's really the origins of the solution.
Yeah. Thank you very much. And who uses this digital credit? And what impact does it have to the population in terms of both socially and economically?
Okay. I want to turn this round from a focus on digital credit to digital financial services, because I think that for a lot of people, digital credit tends to be a very dirty word, especially when we focus on it from a pricing perspective. Yeah. And I think to look at it from enabling people who ordinarily would not save to be able to save.
Right.
Because on M-Shwari, you are able to save less than $1, a shilling. You can save a shilling on a daily basis. And that, I'm yet to see any bank anywhere in the world which can actually do that cost effectively. And we've been able to develop a cost-effective way of facilitating that. One, through M-Pesa, directly from a technical point of view, and secondly, through the use of the large M-Pesa agency network across the country. And so I think that it is important that every time we talk about digital, we look at the broader financial services provision as opposed to purely just credit.
Right.
Credit is obviously important for us because on a daily basis, we evaluate in excess of 200,000 to 300,000 credit requests, of which close to 120,000 would be successful and would be granted credit, anywhere from $1 to 50 to about $5,000. And so it's a very, very continuous process. We've developed credit algorithms which basically allow us to look at behavior, both within the telco side, from the payment perspective, and also behavior and how these people interact with savings products and also with loan products. Right. And that allows us to evaluate and review their credit limits on a monthly basis. And that's really the principal basis for decision making. Insofar as impact in the market is concerned, I think that currently about 55% of the users of Mshwari are men, and 45% are women. Right. 40% of all credit specifically is granted between the hour of 3 and 6 in the morning. Strange thing, you might ask yourself, what are people doing borrowing between 3 and 6 in the morning? Essentially, these are traders across the country who are basically going to markets to buy produce and to be able to then deliver it to the various markets across the country. And so we see it as being very, very critical to driving economic activity across the country.
Wonderful, wonderful. Maybe the audience will be very interested to know, these people, were they banked before? And maybe what, in terms of demographics, how many are they? And maybe again, in line of what the previous speaker talked about, in terms of men, women, what are the demographics look like?
Okay. I would really safely say that the tipping point and the point of change was the ease with which people were able to be onboarded on M-Pesa. I think that if M-Pesa had not been as successful as it is, I don't believe that Mshwari would have been as successful. And so I suppose the starting point has got to be M-Pesa has basically driven financial inclusion in this market from a payments perspective. Right. And so people who ordinarily found it difficult to interact with banks were basically able to interact with an institution which was sufficiently trusted. All we did beyond that was basically bring in our banking, should I say, our banking license to support the next stage of the development. And that was basically to now formalize the journey towards being in a bank as opposed to being in a payment-only ecosystem. And the journey was basically driven by understanding what these customers were looking for, looking at the pain points they were going through, and also ensuring that you made it as easy as possible. Right. And so our philosophy in looking at these digital type solutions is to ensure that you take the least amount of time. When we designed Mshwari, the customer engagement journey was defined as a maximum of 15 seconds to be able to actually do a check to confirm that you exist. Right. So using your number, you do a verification, a KYC verification, which basically confirms that you are who you say you are. And that takes about 15 seconds. The journey towards being able to then begin engaging with the product also was made short. So all decisions are made within about 10 seconds at a maximum.
Oh, thank you. Thank you very much. We are glad because Kenya has been leading in the fintech technology in terms of finance. And even I remember there's a joke which was going around that Kenya has got a peculiar way with dealing with their phones. But this good story has not gone to Africa. As an industry leader, what opportunities will you be able to, what opportunities are they there in Africa, and how will you be able to, and how do you place yourself in terms of playing that role, in terms of spreading that good development in Africa?
I think that the approach we took initially was to look at how we could make the product work effectively in a market we understood. We don't presume to understand everything that happens in other markets. And so the typical approach we take is basically invest time to understand the behaviors in each of the markets we want to go into. Look at what kind of partnership frameworks we can put in place, and then look at what the licensing requirements basically are. And so as of end of this year, we're operating in 5 markets across Africa, predominantly within East Africa. So we have an operation in Tanzania, where we have to have a banking license. We have an operation in Uganda, where we happen to have a banking license. We have an operation in Rwanda, where we also have a banking license, with telco partners who are also in the mobile money space. So those are 2 very essential ingredients for us to be able to work in these markets. Our first foray outside East Africa was in Ivory Coast in February last year, with a local banking partner and our telco partner in East Africa. And that's been a very, very interesting journey, because actually in terms of customer acquisition and deposit mobilization, it is ahead of the curve insofar as Kenya is concerned, when we look at the level of mobile money penetration. And end of last month, we've just crossed the 2.3 million deposit customer acquisition. And we just sent a team into the market a couple of weeks ago to look at what other solutions we can provide. And we are looking at Islamic type banking solutions to meet specific needs of that market.
Thank you, thank you. There's one question which the audience requests me to ask you, in terms of the fact that the UN launched a global task force on digital financing for the attainment of sustainable development goals, the SDGs, to harness the power of digital finance with an objective to reduce inequality and fight poverty in Africa. Maybe in your own view, how has that objective been able to achieve? How has it been achieved in Africa? And maybe as you answer that question, I would like you also to talk about a little in terms of the pricing of the credit in particular.
Okay. I think that if I focus purely on what I've seen happen from a Kenyan and East African perspective, we've seen more than 80% of the adult population interacting with financial institutions, which was not the case. I think 5 years ago, that was sitting at about 35%. So I think that there has been a definite increase of number of people interacting with financial institutions. In the first instance, to basically drive a stronger savings culture, which is very, very important for us. And if I look at the volume of transactions we handle on a daily basis from a financial services perspective, we do in excess of 1 million financial transactions on a daily basis, and close to 2.5 million non-financial transactions, inquiries and all that every day. And that's a high volume. We are allowing people who ordinarily would not be able to save before to be able to save. And I think that touches some of the SDG goals very, very closely, I believe. Secondly, from an access to finance from a lending point of view, we are also touching constituencies and communities which were not reachable before. Today, more than 45% of our borrowings and our customers are basically women who are in business, substantially at the bottom of the pyramid, who would not have been able to access credit if some of these services were not provided for. Pricing, obviously, is a very, very emotive subject out there. And we do a lot of analytics in terms of the type of price pressure point which should be applied. And I think that there are as many price points as lenders in the market. What we look at is try and make it as scientific as possible. We know that the first loan is always the highest risk loan, and the default level of that first loan is extremely high. Right. So the person who comes to try, sometimes with the intention of not paying, is definitely a problem. And so it's something we have to deal with. What we found is that repeat borrowers are actually much more loyal and have a much lower delinquency ratio. On an overall basis, the delinquency ratios we are achieving now are beginning to look much better than what conventional banks are able to achieve. And so we are now beginning to look at pricing which takes account of a customer's payment history and the kind of behavior they display, so that if you are able to pay quickly, then we give back a 20% discount back to the customer for paying their loan quickly, to just encourage the right kind of behavior.
Oh, yeah. Thank you very much. Because I want to give the audience a bit of time to, I'm sure they have a lot of questions. Maybe my last question would be, in Kenya, you have a lion's share in this fintech finance, about 30%. And the other players come almost like 12% down the line. What would you like an investor to take away from this discussion in terms of your critical success aspects? What has made you to be who you are in terms of where you are right now as a market leader?
Okay. I don't mean to brag. We actually have 65% market share.
Awesome.
So, but yeah, I think that there are three very important ingredients insofar as this is concerned. I think first of all is the ecosystem from a legislative point of view, which encouraged institutions to be able to look at out-of-the-box solutions. And I think that we must thank the regulator in Kenya for being forward-looking and allowing things which ordinarily would not be allowed in other markets to take place. So M-Pesa, I think, was born out of that kind of regulatory foresight. Right. Secondly, the government of Kenya, from the perspective of digitizing some of its activities. And so the KYC we do is completely digitized. Absolutely. And that was a very critical ingredient. The second critical ingredient was the legal framework allowing electronic contracting. The third one, obviously, was organizations like ourselves, which are prepared to take these types of risks. Yes. And I recall the first time I presented this to my board 7 years ago. I think the first question from one of our directors was, what had I been smoking the previous day? Because asking for an investment of $12 million yes. without guarantee of whether it would work, yeah. just on the faith that M-Pesa had worked. Yes. The outcome has been much better than any of them would have dreamed of so far.
Oh, thank you very much. Thank you very much, Isaac, for very insightful discussion. So I'll invite a few questions. We have about 6 minutes to get the questions. Kindly give George the mic. Thank you.
Thank you, Ed. Thank you, Isaac. My name is George Odo from Africa Invest. My question, Isaac, is about the scalability of your model. You mentioned you have 65% here, and you mentioned an initiative in West Africa. So, Ed asked you about, carrying the success story across the continent. So how scalable is this model? Do you have to start from scratch every market you go to, negotiating with regulators, building a new, or do you have some proprietary, systems that you can just roll out easily? Do we expect to see CBA as the next UBA?
I think that the model is obviously is technically scalable. The challenge I think we've had is if I look at the banking technology partner we worked with, they never developed a software which handled more than 20 million customers. And so that was really the first point of, should I say, conflict. We've stripped the system of 5 markets, serving close to 41 million customers. And so something is definitely working from that point of view. The telco systems are obviously important because that is essentially our payment ecosystem. And they also have had to invest in scalability because the volume of transactions we handle are sometimes very, very mind-boggling. So from a technical point of view, it is scalable, and actually we're looking at our overall business model to basically make it much, much easier to deal with challenges, for example, of data availability in each of the markets, because each regulator wants the information to sit in their market. And so this centralized version of information sitting somewhere in the cloud is something which regulators don't easily understand. And so we've had to look at our model to make sure that we can achieve that. We have to deal with regulators in every market, and it is all a new, it is very, very new. If I take the example of Ivory Coast, we've been on the journey with regulators in the Waemu region for the last 15 months. We are expecting that we will finally get our formal license in the next 2 months. In the meantime, we've worked with a partner on the ground who we've been able to use to test the solution, make sure it is working, and iron out all the kinks. So regulatory challenge will, I think, be the main issue in each of the markets we go to. From a technical point of view, it's not difficult to build a platform which can actually work in multiple markets. And that's the direction we're going.
Thank you very much. The next question.
Thank you very much. What would you say to the allegations that Mshwari's interest rates are too high and that it's fueling over-indebtedness and a credit bubble?
I would say that without the facts, a lot of statements can be made. And I think that that is a trap we fall into. Mshwari is based on some very, very precise research. Yes, the price is high. The price of money is high insofar as a typical borrower who walks into a typical commercial bank is concerned. And I think that when we did the research 7, 8 years ago, and we asked the customers what are the critical issues which would enable you determine how you interact with a bank from a borrowing point of view, price was actually number 8 out of 10. Because if you don't have access, how important is price to you? If you can't get the credit, price is not important for you at the time. But also, the tendency to look at this from an APR perspective is also the other issue. And we sat with some of the traders and asked them, look, this is what you are being charged, and this is the typical structure of your business. Do you think that this is sensible, or it is way too high for you? And many of them do the math for us to basically tell us, look, this is what I buy my product for. This is what the various costs are, my transport, my financing, and all those things. This is the margin I make at the end of the day. And the price you charge is included in that margin. And so we can have a conversation about price, and I think that it is an important conversation to have. But I think that to say that this is the sole reason why people are running into indebtedness, I think one is a mistake, and 2 is misunderstanding the facts, and thirdly is misunderstanding the need in the market. Will there be differentiated pricing? Absolutely. Will there be higher pricing? Absolutely. Try and go and get a payday loan in the US with your check and compute the price you pay for that. And then we can then begin to have a conversation about differentiated pricing.
Thank you.
Thank you very much. Would have liked to take more questions, but time is not on our side. But I want to thank you most sincerely for that opportunity. I'm sure there are many people who have got a lot of questions. I request you kindly to keep your channels of communication open for the investor to come and learn from you. Thank you very much for your time.
Thank you very much.